Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly. Today we're digging into three pretty distinct areas. We got the U.S. Federal Reserve, interest rates, and some political heat there.
Right. Then there's crypto regulation, looking at the US versus South Korea. Quite different approaches.
Exactly. And finally, something a bit different, the K-beauty industry. Still growing like crazy.
Yeah, really explosive growth.
We've gone through the latest news, the reports, and basically our mission is to pull out the key stuff for you. The important takeaways, maybe a few surprises along the way.
Mm-hmm. It's interesting how these different threads sort of weave together or sometimes clash when you look closely.
Definitely. Okay, so let's kick off with the Fed. Interest rates. Seems those expectations for cuts before, say, September fading.
Yeah, they really are. Despite, well, pressure from folks like President Trump.
Right. The Fed's talking about multiple headwinds. Things like trade policy uncertainty and that U.S. sovereign credit rating downgrade, which, basically means some folks are a bit less confident in the U.S. government paying back its debts.
And that downgrade, it adds another layer of risk they have to factor in, doesn't it? It's not just politics, it's about stability.
Exactly. They're trying to balance things carefully. John Williams, he's the New York Fed president, he basically said it outright at a conference.
What did he say?
Something like, I don't think what's happening with the U.S. economy in June or July.
Wow. Okay. So clearly signaling patience, they need more time, more data.
Yeah, that's the message. Yeah. And it seems Raphael Bostic from the Atlanta Fed is kind of on the same page. Prefers keeping rates steady for now.
So the upcoming meetings, June, July, September, October, December, we should probably expect more of the same, at least initially.
Looks that way. Stable rates seem likely in the short term. They want to see how things play out.
Makes sense. Rushing could cause problems down the line. Okay, so what about crypto? You mentioned contrasting approaches.
Yeah, huge contrast. Over in the U.S., the Senate just passed something called the Genius Act.
The Genius Act. Okay.
And it got strong bipartisan support, which is, interesting in itself. 66 to 32 on the vote.
So what's it designed to do?
It's focused on regulating stablecoins. Those are the crypto assets pegged to regular money, like the U.S. dollar.
Ah, right, like Tether or USDC.
Exactly. The idea seems to be, well, partly to keep the dollar dominant, but also to encourage some responsible growth in digital assets, setting up some guardrails.
So the U.S. is trying to get ahead of the curve, maybe set some standards.
Seems like it, trying to create some clarity. But then you look at South Korea.
That's different.
Yeah, reports say they're facing a regulatory vacuum, kind of lagging behind.
Really? Because Japan, for example, seems to be moving. I heard Mitsubishi UFJ is planning yen-backed stablecoins.
Right. So Japan's moving. South Korea has plans, apparently, to include stablecoins in their next phase of crypto laws later this year.
But it's slow going.
It seems that way. Politics, the upcoming presidential election, stuff like that is apparently slowing things down.
So experts are probably worried they'll fall behind.
Yeah, there are calls for us to speed things up, get those one-backed coins going, build up consumer protection. It's a risk if they don't.
Yeah, you risk losing innovation, investment maybe, if the rules aren't clear. Okay, interesting contrast there. What about the last topic, K-beauty?
Ah, yes. K-beauty just keeps defying any doubts. The growth is being called spectacular.
Spectacular how? Like, what are the numbers?
Well, get this. Leading brands are seeing average growth rates around 80%.
80% average, that's huge.
It is. And some brands broke $300 billion won in annual sales last year. That's roughly $250 million US dollars.
Wow, how many brands hit that mark?
8 major ones.
Yeah.
And for 6 of them, it was their first time reaching that level.
Incredible. So the market's really booming.
Doubling sales, basically. The average revenue growth for those top 8 was almost 100%. And 3 brands had what they called quantum leap growth sales, jumping over 100% just from 20.
Okay, what's the secret sauce there? What's driving that kind of explosion?
A big factor seems to be overseas sales. They're doing really well internationally.
Expanding beyond Korea.
Exactly. Especially in developed markets,
Yeah.
places with strong purchasing power. It helps them handle things like tariffs, or even if the U.S. economy slows down a bit. Diversification.
That makes a lot of sense. Spreading the risk, tapping into global demand, shows real resilience.
For sure. So, yeah, 3 very different areas we've covered.
Yeah.
The Fed holding steady amidst pressure.
Uh-huh. The U.S. moving on crypto rules while South Korea is playing catch-up.
Right. And then K-beauty just surging ahead globally. It's quite a mix of trends.
It really is. And looking at all this finance, regulation, consumer markets, it makes you wonder, doesn't it?
Wonder what?
Well, what other unexpected forces might be bubbling up? What connections could emerge between these seemingly separate worlds in the next few months? And maybe what other industries are out there poised for that kind of K-beauty growth, or maybe facing big regulatory shifts we aren't even thinking about yet?
That's a great question to leave things on. Definitely something for all of us and for you listening to keep an eye on.
Thanks for diving deep with us today.